Hey, what's up? This is J. Lucky Henry. So this is part 2 in the 3-part series of how to buy property with little, bad, no, or even stellar credit, and most importantly, OPM. So get ready. This is J. Lucky Henry, Keller Williams agent in the greater Boston area. You won't believe how many people need to get real. R-E-A-L, Real Estate Explained amazingly by Lucky in 90 seconds, give or take. Welcome back. It's J. Lucky Henry. So we're talking about how to buy property with little, bad, no, even stellar credit for those of you overachievers, right? So number 2 in this series, and this one is called hard money. So this is hard money. Hard money is literally all coins. It's no paper. That's why it's hard, right? That's it. It's the end of the video. Okay, I'm just playing. Hard money is actually money you borrow at an exorbitantly high rate. So if traditional interest rates are like 5%, right? If traditional rates from the bank and stuff are at 5%, you can expect hard money to be at like 12, right? It's a lot more expensive, but it's what's called asset-based lending. So why does this matter? Let's say you got a weaker credit score, but you have a talent, you have a skill, you can find and negotiate with people to buy properties a lot lower than market value, or find properties that need a lot of renovation, and the ARV after renovation value on the property is extremely high. If you can throw in maybe 20 grand, you could increase it to like 100 grand for the market value. So when you're looking at properties like that, if you can find those, that's the asset. And hard money is asset-based lending. So they want to know, what are you buying it for? How much are you going to renovate it for? And then what's the ARV? How much can you sell it for at the end? Now, if the ARV is high enough, they all have their formulas, whether it's 70%, 80%, 60%, right? If the ARV is high enough and you have the cash for a down payment, they'll give you the money. Because here's what they look at is they're going to fund, a lot of them will fund the renovation costs. So if you are, for some reason, defaulting on the loan or don't pay it, they just take it back, right? And they're already funding the renovation, and they know that post-renovation, it's going to sell for a great amount, an amount greater than what they used to buy it. So for them, it's a win-win. Either you're going to sell it and pay them back for what they gave you, or they're going to take it and sell it and make the money you could have made had you not defaulted. So it's a win-win for them. But for you, it's a win-win if you don't got the great credit to go to the traditional route. However, the only thing is, these are properties you do not live in. These are not traditional mortgages, so these are not properties to live in. These are strictly for investments. If you're looking for your own house to live in, we have a different video on 203K loans coming soon. So subscribe to the channel so you don't miss it. 203K and other renovation style for renovating the house you actually want to live in. But hard money, it's how to get money with little, bad, no credit to buy property as an investor, right? Check us out tomorrow for part 3 of how to get money with bad, zero, no, little, or even stellar credit. This is J. Lucky Henry, and I'm here to keep it real with you. Whether you're looking to buy, sell, or invest in real estate, call or text 978-712-0244, and make sure you subscribe to my channel for more.